Marek, thank you very much for being here with us. Just to start the conversation, could you kindly just introduce yourself, tell us a little bit about the company?
Sure. My name is Marek Noetzel. Thank you for inviting. Pleasure to be here. I'm Chief Operating Officer of NEPI Rockcastle, and in short, NEPI Rockcastle is a listed retail real estate company. We are listed in Joburg and in Amsterdam, and we manage and own 60 properties across 9 countries of CE, and we do only retail and only in that region. And well, in short, the company was founded by some South African entrepreneurs, and it has grown to become today the third largest listed retail real estate company and the biggest by far in CE.
Nice. Now, taking advantage of that and talk a little bit about the retail marketing, what's still driving your convictions in bricks and mortar retail, and what's changed since pre-COVID?
So it's a very good question because the answers are very positive for the market in my thinking, and I have a big belief that as long as the following sentence is true, that people are social animals, they will have to go out, socialize, meet. Their changes will change in time. I mean, we know how retail is evolving over time, but at the end of the day, we all like to meet. We hate sitting ourselves in front of computers as much as it can be cool on Friday when you work from home, but actually it's no longer working, but actually longer weekend. But to be very realistic, as long as I believe that we are social animals, I will be bullish on shopping centers in certain particular locations. And what has changed since pre-COVID, I think we have all been a very steep learning curve of how to use modern technology to make our life easier, and that includes retail, of course. And we have experienced period of closed shopping centers. We all had to buy online. Buying online only wasn't actually very convenient, so we are back to shopping centers open, and what has emerged is a big phenomena of omnichanneling, which is a smart combination of both brick and mortar and e-commerce. And here we are in the era of omnichanneling evolving fast, and the consequences are material for the industry in a very positive way. COVID has helped some of the companies to make a technological step forward, and they came stronger, bigger, and they expand more, and they have learned as one of the first adopters that actually it is e-commerce that is helping brick and mortar sales and vice versa. And there are already examples, scientific examples of physical stores being open in catchment areas where there was online only. And guess what? After you open physical store, the online sales go up and vice versa. So all in all, it's all about combination of the two that makes today's retailer successful. And there we are for them to help them to fulfill the gap of brick and mortar, part of their overall retail ecosystem.
It's true. It's true. And what do you think makes CE retail is still a hot market for the real estate in retail?
We look at it on the relative basis, meaning we compare ourselves to other regions on various parameters. Number one is purchasing power, and it's actually delta year on year, and it is increasing at faster pace than Western Europe to compare to, which is purely function of faster growing GDP, low unemployment, and actually wages outpacing the inflation, leaving more disposable income in hands of our customers. Number one. Number two, there's much less retail in where we operate per capita, 4 or 5 times less than in Western Europe, so it's less competitive. And at the same time, we still, as society, we want to catch up with Western Europe standard of living, and that includes entertaining ourselves, going to shopping, etc. And all of that makes us bullish on investing rather where we are, as long as we can see that the growth will be faster than the average for European Union, than going out of our territory, so to say. So given all those fundamentals will be there in place mid to long term, which we believe is the truth, we believe this is the place where we should put most of our attention and investment ideas.
And talking about the international investors, if you should have an advice to them, what they can't underestimate it about the CE market, the retail market?
I think a lot of that comes with actually understanding. It's just as basic as understanding what CE is, because I still think that for wrong reason CE is considered as less developed or less inspirational part of the world, whereas when you take an effort and you travel to Warsaw, Bucharest, Prague, and you travel to in the countryside, you will see how much the region has changed. On a relative basis, the development of infrastructure has outpaced the ones of Western Europe. And a lot of people who come to that part of the world from Berlin, Frankfurt, Paris, London, then they see that actually not much has changed in those capitals, but for example, Warsaw is a different place than it was 10 years ago, not to mention 20 years ago. So the delta, the inspiration, the ambition to improve our standard of living, to catch up with the 45 years of lost opportunity growth is just accelerating any other part of our lives, including professional lives and including investment decisions. So if you start with that, that's already 80% of the work you need to do to convince people to work here. This is the market. Another thing, liquidity. Of course, the smaller the market, the lower the liquidity, but I truly believe that this will improve in time. I truly believe the legislation will change towards more activization of local money so that the market can be more liquid. The more liquid market, the more interested parties to enter the market, and then it will become just fulfilling thing, and then I think it can only improve the market efficiency.
And as a COO, what's the biggest challenge to keep delivering a consistent value to the market?
Where do I start? No, I'm kidding you. I think it's not about challenge, because challenges are there every day in retail market. It is forever changing. When I think about the market 10 years ago, 15 years ago, and the setup of retailers successful at that time versus what it is today, different story. So you can't have a mindset of leasing and forgetting. This is not retail. If you are into that sort of business, probably you lease logistics for 20 years, that's it. That's not retail. So we call ourselves very active asset manager because we do a lot of changing of tenants every year, not necessarily waiting for leases to expire. So when I think about challenges, it's about making sure that our organization is agile, is capable, is flexible enough to be responsive to the changes. I'm not afraid about the market. I am very much focused on us being able to react quickly, make quick decisions, have support, have smart people, have talented people around me. Because if I have that, which I truly believe I do have around me, then anything else is easier. And we have gone through COVID with that mindset, and really on comparable levels to our peers, we did very, very good. That was a big test for us, so I think anything is possible. So I'm not afraid about challenges of outside world, and I believe what we can control, we control well, and that's fine. But what we can't control, we just can't control. Geopolitics, politics. I mean, this is not a responsibility to be responsible for. So that's how I look at our organization. Then when you look at about average work period for the more senior people, it's very, very long, and I'm happy. I think it tells a lot about the organization. Low rotation, smart people, very entrepreneurial spiritship. Very quickly in that organization, you get to be involved in very big projects, which if anybody has an ambition to work in real estate, I mean, this is the place to be. So this is the starting point. If you have the organization, you can deal with every problem that will come, because those problems are common for all the market participants, but not everyone can deal with them with the same efficiency, so to say.
Yes. Connecting to that answer, you've been spending and repositioning your portfolio. And from where do you believe that it came the biggest part of the growth? It came from the new developments, new acquisitions, or a smarter asset management?
It changes from year to year. Of course, last year was very much driven by acquisition, because we bought 2 gigantic shopping centers, and that's great. But I would be naive trying to budget for the growth of this year another 2 acquisitions like that, because simply it's not stock market when you go and you buy and you have it. It's different story, and we have very rigid investment rules. So the property that we know exactly what we want. We have the list of wishful thinking kind of list of properties we want, and they don't come every day. So that's number one. And so it will differ from year to year. But if I were to have a helicopter view, there are 4 main pillars of growth. One is actually, we have very rigid investment rules. So the property that we know exactly what we want. We have the list of wishful thinking kind of list of properties we want, and they don't come every day. So that's number one. And so it's very, it will differ from year to year. But if I were to have a helicopter view, there are 4 main pillars of growth. One is actually extracting value from existing portfolio, and that's asset management initiatives. But because only about 15% of gross rental income expires every year, it can never be the very big engine or the growth, but I want to make sure that expiries grow faster than the inflation. That's number one. Number two, acquisitions. Very speculative. 1 year you buy, then 2 years you don't buy, but we are very active monitoring the market. Number three, developments. Takes a bit longer. You spend a lot of cash before you see the income, but we have pipeline of around 150 to 200 million a year to be delivered for next 4 to 5 years. So 1 billion there that we are working on. And number four is actually a new business line, which is energy. We are spending a lot of cash to produce ourselves energy, and that's because it's very ESG friendly, of course, but as well, this is quite a lucrative business for us because the returns are much higher, of course, than in properties. And given how much energy we use and that our tenants are actually asking us to deliver them the green energy, why not doing that? So we have those four engines. Each of them will work a bit different pace each year, but those four are the main pillars, and we have structured the company such that each of them is efficiently equipped with capex to be able to get the best speed.
Very interesting. And just to finalize our last question, what do you like most about your participation at the GRI?
This very interview. No, but being very honest, I have had a couple of invites which I declined in the past, so I must admit, but then I said, let's do it, let's try, and I saw so many senior people from industry, and I very much like this retail discussion. It was very in-depth, very open, people from with retail interest only, and they are very happy to share the risks and the opportunities, what bothers them, etc. It's very cool to actually speak about challenges with people from the business, but outside from your organization, to get a different view, and I like it a lot. I'm very much looking forward to investment panels, etc. And something tells me I'll be back.
Thank you very much again, Marek, and thank you again for this interview.
Thank you very much. Thank you.